Alex, first of all, good afternoon. My sense is, see, Zomato is one of those companies where there's a limited area of competition for them. If you see the entire food delivery space, there are just two players, Zomato and Swiggy, and I think the way Blinkit has taken off, the way volumes have grown for this business. Initially when it got started, I remember there was a lot of flank which the management faced. But I think now the customers are getting used to the Blinkit model. I think more and more business is coming to them. Plus, Zomato is also doing pretty well. If you look at their operational numbers, I think not only have volumes picked up, profitability has picked up, and the management's clear focus is on improving the profitability. So I think, although we are not saying that, the stock is cheap, but I think if you look at the next, say, 2 to 3 years, I think this is definitely a stock which is going to ride high on the India consumption kind of story. And I think it's got, terrific kind of tailwinds to grow. So to that extent, I think if one were to take a longer term view, Alex, I think definitely one can still make a lot of money here. But I think here the time horizon needs to be slightly long because now we have seen the stock multiplying almost from 50 odd levels to almost 250 now. So I think clearly some consolidation will happen. But yes, over the next say 2 to 3 years, as the business scales up, as the profitability gets better and better, I think you could see a gradual re-rating happening here. Alex, it's always better to wait for some time because typically whenever a demerger happens, I think the stock takes some time to settle down. The markets would like to await the commentary from the management and look at hard numbers, at least the financial data point numbers from this independent entity. Although one thing is very clear that they have a very strong business model, right from the fabric to the garmenting, and there is a very big opportunity in the urban lifestyle, space. I would believe that there is definitely good value to be made, but I think it's better to wait for the management to come out, clarify their position, and I think look at least the next 1 or 2 quarter numbers because that is going to re-rate the stock in the longer term. In the short term, the stock is going to be purely governed by demand supply, mechanics. And I think currently what we are seeing is a little bit of profit booking from the initial listing price. So
That's a
longer term,
fact.
yes, we are positive, but short term, I think the stock will be volatile. Yeah, I think Alex, this company first of all is a well-established IT vendor and has a very good clientele both in India and abroad. And most importantly, it's got an order book of almost 600 crores plus. So I think revenue visibility is pretty strong, and the stock is trading at 305, 306 levels. If the investor has a 12 to 15 month kind of time horizon, I would suggest let the stock settle down. Let us get maybe a couple of quarters numbers from the management, and once we get a better hold on the management commentary, I would not be surprised that you could see a recent amount of re-rating happening here. So consider it to be a good investment, for at the current level, and I think one can definitely consider holding it for the next 12 to 15 months. I think you should be able to get a decent risk reward. Yeah, I think, see, Alex, within the multiplex space now, PVR INOX is the largest player. It gives them tremendous pricing power, and obviously the geographical reach is now going to be extremely solid. So I think if the investor has a slightly medium to long term view, I think he should hold on because the timing, what he has done is probably a right timing for his acquisition price. But if you look at the business model, if you look at the growth prospects of the Indian cinema industry and the kind of growth potential, over the next say couple of years, this could become a very good wealth creator. But I think one needs to understand that you need to spend a little more time here. In the near term, the stock may remain a little bit range bound. But over the next say couple of years, I think the entire business model would generate a lot of free cash. And obviously, the Indian cinema market is a very big market. Not only India, but even globally, I think markets have welcomed Indian cinema very well. So this benefit will obviously come to PVR INOX. You just have to give in some more time. Patil, as you rightly mentioned, Alex is a large player operating in the Pune market, but now they've entered the Mumbai and the Bangalore market also. And I think, looking at the kind of inventory and the kind of projects they have been betting on, specifically Mumbai, Bangalore, and now, of course, existing Pune, I would not be surprised that, if the investor can give in some more time here, maybe next 12 to 18 months, the real estate markets have been doing pretty well. Inventories are also moving pretty fast. And most importantly, it is one of those quality premium players which is well known for its construction quality. So, it's got a very good clientele base. So I would suggest, just hold on for the next 12, 18 months. Earnings growth for FY25 and 26 looks very strong. And I think if execution is all well, then I think you could expect a significant amount of re-rating. Longer term, I think I would continue to hold. If you have a 12 to 18 month horizon, NCC should do remarkably well. very strong order book and very good execution. So continue to hold.